Hello, and welcome back to the Macro Gamer channel. My name is Mark Hassingham, and today we're going into week 13 of our investment portfolio. And today's date is October 19th, so we're going to get into our weekly numbers. So let's get started. So as of today, October 19th, our portfolio's net worth is $227.99. And you can see the pie chart, how it's laid out, the different colors representing our different asset classes. Our portfolio weekly data shows a money weighted return of 0.82%, which you see down here in the green. As always, these large spike ups like this is when we deposit cash into the account. So this is not market performance, this is a cash deposit. So this happened on the 16th of this week. Our starting value from October 14th to October 19th, you can see the information here. The net cash flow was $31.97. So that was for that deposit here. And we had a market gain of $1.68. So 0.82% up for the week. Our monthly data, you'll see two large spikes here. This was September 25th, and then as I said, October 16th. So these were two times that I deposited $30 into the account. So you see those two large stair steps. But our actual performance for the month is up 2.77%. So this is again the money weighted return. These large spikes aren't representative of our return. That's just cash deposit. Our actual return is 2.77%. So this is from September 19th to October 19th. The cash flow is the $60.67. So you see those two large spikes, $30 on each one. We had a market gain of $3.58 and a dividend earned of 22 cents. So this is our week 13 monthly data chart from, again, September 19th to October 19th. Pardon me. So we have our weekly numbers, our percentages. We see gold, we still have it at 30%. I believe, yeah, gold did hit another all-time high this week, just still going. In 1 week, it's up 2.34% for a gain of $1.50. Our government bonds, last week, we made that change, so we dropped it down from 30% to 25%. So we're up 0.04%, or up 2 cents. Our US dollar, our UUP, up 0.65% for a gain of 21 cents, and we still have that at 15%. That has not changed. Our UFCI, we brought up from 10% to 15%. We did that last week. So we brought our bonds down 5%, and we took that 5%, we added it to our commodities ETF USCI. So now it's up 15%. The performance of it for the week is down 3.04% for a loss of $1. So definitely bad timing on my part. But I still think commodities are, in the long term, going to still perform well. Just clearly not this week. Our stocks, our equal weight S&P 500 ETF, up 1%, 1.07% for a gain of 23 cents. So we still have this at a 10% allocation. And our Bitcoin ETF IBIT up 8%, or a market gain of 80 cents, still at 5%. And Bitcoin has been looking like it's coming out of its trend. It hasn't really made a new trend, but it's kind of peaking out, and we'll show you that in the next chart. When we get to the charts. So that was our weekly percentage returns. Now this is our monthly percentage returns. So all the allocations are still the exact same. So gold for the month from the September 19th to October 19th, up 6.28% for a gain of $3.56. Again, our best asset in this portfolio. Government bonds down 2%, or $1.09. Yeah, bonds have just been going up and down. Our US dollar up 3.01%, or a gain of 0.87 cents. Now, this is actually pretty good. It's been coming back. So as bonds have been coming down, dollar's been coming up. So remember, as I lose money in bonds, The inverse is happening in dollars and it's going up. So even though it's 25 to 15, I'm still not losing as much as I could. See, I lost $1.09 here, but I gained 87 cents here. So I'm still down between the two of these, but I could have been just down $1.09 in total, if I would have lost that. So these two are inverse of one another. So this went down, this went up, then vice versa. This went up, this went down. So that's hedging my portfolio between bonds and currency. Our commodities ETF is up 3.34% for a market gain of 8 cents. Our US stocks, S&P 500, up 3.33% or for a gain of 64 cents. So also stocks have still had a great year. I should have been putting more than 10%, but I've yet to convince myself otherwise, even though the charts are clearly telling me I should. My Bitcoin ETF up a 14.19%, almost 15% in a month. It's pretty good. Up $1.24. So again, we only have that at 5%. So Bitcoin has had a strong month for sure. So we have our portfolio transactions. So on October 16th, as I said, we put in $30, so $31.97, and we equally distributed it based on our percentages that we have allocated. So our IBIT, which is 5% of our portfolio, got $1.76. Our US commodities, which is at 15%, got $5.56. Our equal weight S&P 500 ETF, which is at 10%, got $2.97. Our UUP, or US dollar ETF, which is at 15%, got $4.68. Our government bonds, which is at 25%, got $8.07. And our gold ETF, which is at 30%, got $8.93. So we deposited $31. Sorry. We deposited $31.97, and this is how it got distributed based on our percentage allocations. And that was on October 16th. So those are portfolio transactions. So now we get to our Illuvium. Current price as recording is $36.50. Currently we have 3.12 ILV staked for a market value of $113.89. We currently have had 2 payments for revenue distribution, which equaled 0.012 ILV, which a current market value of 44 cents. As of right now, we haven't gotten a new payment yet. So like I said, we just had 2 payments so far. We have our vesting schedules. So we have our first lockup on July 27th, unlocking in 281 days. Our second lockup on August 24th, unlocking in 308 days. And our third lockup on September 25th, unlocking in 341 days. Now, what's today, 19th? So probably next week, I'll probably purchase another $40 worth-ish. It might come out to about a little over 1 ILV. And I'll probably stake that. Usually towards the end of the month is when I do that. So $40 each month. And we'll stake that, and we'll likely have 4. Or we will have 4. We'll have 4 different vesting. So you'll see that. And I'll show you the transaction on that when that happens. Currently, no revenue distribution this week for week number 13, so 0. Like I said, they get the way it works is they get to 150 Ethereum worth in their holdings, and when they get to that number, whatever based on whatever Ethereum's current price is and how much, and they have 150 Ethereum, they distribute that out to all the stakers. So July is when we started. And we had 2 revenue distributions, so 2 within, you could say, 3 months. Maybe once every month or every month and a half, 2 months or something. If that trend continues, which we have no guarantee it will, but if that trend continues, that's when you'll see the payments. So maybe another couple weeks or so, we'll see. But that's where we're at. We had no Illuvium transactions this week, and those are our weekly numbers. So now we go into our charts. So as always, start with my favorite asset right now. I say right now because when the gold trend turns, my opinion will change. But as of right now, gold has been in a great uptrend all year, hitting all-time high. Look at this, right up here, just peeking out of the trend. All right, just peeking out of the top of this trend, just all-time high. I say it every fucking week, and I'm gonna keep saying it. We have no reason to sell gold right now. Why would you sell this trend? It's phenomenal. It's our best trend, and it outperforms S&P 500. If I put in the SPY, do same scale on a 1-year trend, it's beating it by just 2%. If I do a year-to-date trend, it's 23% to 30%. It's beating it by 7% this year. So on a 1-year trend, it's beating it by, well, now it's adjusted. I should have done that in the first place. So about 5%, 5-6%. And on a year-to-date, so from January 1st, 2024 to today, it's beating it by about 7%. So there's no reason to sell gold. It's outperforming. It's doing wonderful. Gold, gold, gold all day. All right, bonds. So this is what I was talking about last week. So when this trend was coming up here, so this started back in April, going to May, June, July. When it was going up into this trend, I increased my bond position because the Fed was starting their rate cut. And then I was like, it's probably gonna go up, and it did. So I was right on that. But then right around here, September 17th, 18th, actually I think it was more over here towards the end of the month, the 30th, but the data kind of showed strong jobs numbers, and then the trend reversed and it came down hard. So I'm kind of back to where, you know, I increased my position at. So we dropped it down 5%. So we're at 30% in bonds, our GOVT ETF, and I decreased that to 25%. So I moved that 5% to commodities. So I'm still going to see what happens with this trend. If it continues to ride this green line, you know, I could still keep my allocation higher to bonds. But as of right now, there's that sharp reversal that happened right here. So I'm just waiting to see what happens. If it breaks down and keeps going down, I'm going to have to decrease my position more and put it to something else. The reversal might be the dollar. I might put it into the dollar to see how it does. But as of right now, this is our trend, and I always point this out. The reason why I'm I'm fingers crossed, hoping that bonds will be a good position, is because we've dropped down since the pandemic started in like March 2020 on this long trend right here. We have had a long drop in bonds, and then this looks like a bottoming area. If you go back even further on this ETF specifically, since the 12th, it was kind of flat, and then we hit this like from the 2019 to 2020, had a big run up and then a big drop. So I don't know if this is going to be the reversal trend. It's kind of banking on that. We'll see how if rate cuts continue. We'll see if that changes the trend or not, but we're just going to keep watching it. Now we have our US dollar ETF. So you see now this is breaking above this bearish trend line. So remember, we had the green line for the bullish trend line and the red line for the bearish trend line. And when it was getting to this point, you know, I was anticipating it was going to break, because it was going to do the opposite of what bonds did. Bonds broke up above the bearish trend line, and dollar broke down below the bullish trend line. So now the strong reversal trend, same with this strong reversal trend here, right? The bonds and the dollar being inverse of each other. So now the dollar's going up. So I don't think it's going to last. Like I said, I don't think this is going to last. But again, I have to follow the trend to see what it says or see what it does. But right now, this bullish turnaround in the dollar is kind of helping me out with my negative bond position because of that reversal. So dollar's doing good right now. I don't think dollar's going to do good long term, you know, because it's a currency versus a investment like gold or stocks or something. But as of right now, it's helping out my portfolio. If it continues, that 15% that we have allocated to it is going to help out my portfolio. So right now we just barely broke up above this trend. So this isn't enough for me to make a change in my allocation. It's just barely peeking out above the trend. All right, so we're going to watch it. And same with Bitcoin will show it's just barely peeking out of its like 6th or 7th month trend. So we'll see what happens. So we have, zoom in a little bit. So we have our commodities USCI ETF. This trend kind of started back in, let's call it July 22, or it's been going in this strong uptrend since then. So right now we had a bit of a pullback. I remember I increased my allocation 5%. Of course, I picked bad timing because the trend came down, but we're still overall in this green trend. So it's still a bullish trend for commodities. Oil's come down a little bit, but remember, this is a commodities ETF. It's not an oil ETF. So there's a bunch of other commodities in it as well. and it tries to diversify against different types of commodities. So it's not all in on just commodities. It's just more of like a commodity sector, the way I look at it. And like I said, I think long term, I think inflation's still going to stick around. Hopefully it's not going to be the crazy 9% month or year over year, whatever it was. That was not that long ago, but it's probably going to be in the 2 to 3% range. At least that's what it's been so far. So we'll see where that goes. But if it's 2 to 3%, and we get that year over year number every month, that means it's compounding every 2 or 3%. If you go back to, I think, and I've talked before, if you follow me on X, let's see if I could, was it a post? There you go. So Trueflation is a good little account to follow. They aggregate their own information, of course. But since January 2020, the compounded inflation rate from then to now is, we'll call it roughly 25%. They're saying 26.2. There's always going to be a difference in how they measure it versus, core CPI and all that stuff. But roughly speaking, 25%. So if you were to go out today and spend $1 on something, it costs an extra 25 cents. You can think of it that way. Or like in 2019, it was 25 cents cheaper. So if I buy a gallon of gas, let's say hypothetically for $1 a gallon, that was back in 2019. Now in 2024, I'm buying $1.25 for a gallon, because that 25% increase, that 26% increase. So inflation is like kept coming up and up and up. Even though you see like little numbers like 2% year over year, 3% year over year, 2.5 year over year, people don't add that up and compound it, that it just keeps going and going and going. They're looking at snapshots in time. I think those snapshots are still going to show 2 to 3%, and inflation is going to compound continually. So that's why when you look at this trend, going back to 2020, this has been commodities just going up and up and up and up and up. This is that compounding effect going up and up, right? So I think commodities are still going to be a good investment, probably the end of this year till next year. We'll see. But I'm going to keep watching it. Right now we have that at 15%. So we have our stocks, our equal weight S&P 500 ETF, still in an uptrend. I still haven't decided to increase my position to it. Still biased. Still think commodity, because the overall economy is not doing too good. So the stock market doesn't seem to care at all. But as of right now, I'm keeping it at 10%. So at least 10% of my allocation is making me money in that. So not too mad at it. But it'd be better if I could increase it to like 15%. So we'll see how next week goes. Maybe I'll see a pullback in stocks, and that'll be my opportunity to increase it by 5%. But we'll see from there. And then we have our IBIT. Now you see this trend popping right here. Extend these out. So a lot of euphoria online for this, because people are seeing this trend and they're saying, "Oh, new bull market," right? New bull market, right? But remember, it hasn't gotten above its previous all-time high back in March, and it hasn't really created a new trend. Like, this is a trend, like it's created this trend. But this is just, it broke out. It's had a good week, so good week for Bitcoin, bullish Bitcoin. I don't think this is a trend reversal yet. I think of, as of right now, similar to gold. Like if we look at gold, like it's peaking out of its trend. But do I think that mean gold is going to just break out and keep going up crazy, or is it going to consolidate back into this trend? I don't know. Bitcoin, it might break out of this trend a little bit and then come back down and then stay in this trend. Like, there's not enough of a change in the trend yet happening. So I'm just watching it for now. Again, we had our peak here and it came back down. We had our peak here and it came back down. Then we had the high right here and it came back down. So as of right now, it's moving towards the all-time high, but I don't know if it could reclaim it and break above it and keep going. It might just go up for a little bit. Euphoria might die down and it comes down. Maybe there's a election influence in this or something, because the presidents are using crypto and Bitcoin as a platform to get votes. So we'll see what happens with that. But as of right now, those are the weekly numbers. So as always, if you have any questions, comments, or criticisms, let me know. And I'll see you next week.